Hello, swing trading entry and exit strategy using long uptrend lines for timing. We are going to use few stocks to illustrate how you can enter and exit a swing trade using long uptrend line swing trading strategy. So the first one we are going to use, let's start from the top on, and the first one is M.A.R. So M.A.R, first you pick those stocks and you trace your support lines for them. So passing by the obvious lows of the mountain, you can use maximum monthly chart so that you can trace some lines going toward the price. The price is on the y axis and the date on the x-axis, and then you go to maximum daily chart. So maximum daily chart is where you analyze the chart and make your decision to buy and to sell. So when we take M.A.R, today is October 13, 2025, and Friday the price went down. So that's why it's red highlighted price just mean the price at the end of the day was lower than the price in the morning when the market opened. And you are going to compare where the price is to where you want to buy. So those support lines, those long support lines that you trace are your entry point. So you can trace multiple support lines, but you will try to find the ones that has multiple touch points. The price pull back to touch point with before going back up. So the lines that will have more than 2 touch point, you want it to favor those. And sometimes you might have multiple lines like that. Some might be longer than others. So the one that you just feel comfortable that the price might pull back to, it could be 1, 2, or 3 lines. You can change the color of those lines so that you can differentiate those from the others that you don't want to buy the price on. And once you have those lines traced and determined, your analysis, your chart analysis will be to compare where the price is to where you want to buy. That is your entry point. So when the price pull back to the support line, it will make lower lows. For instance, this low is lower than this one, is lower than this one, so it'll make lower lows. When it reaches the support line and is ready to start going up, it will make higher lows. So for instance, you will see this red bar here is higher than pretty much the one here, there's one to see, which is higher than this one, so you'll have higher lows. So when you start about 3 of those higher lows, you can purchase the stock at the first or second green bar that follow one of the last pullbacks. And yeah, so but way to have at least 3 higher lows before you decide is a way to just try to have a confirmation that the price is done going down and is ready to start going up. That way you are not going to stay in the trade for too long. It can even do that, but still it might turn around and go down and you might stay in the trade long. But if you are trading a good stocks to begin with, there is no need to panic. You can just stay in the trade longer until it's ready to start going up. So until then, you'll have a negative, you'll have a loss, unrealized loss in that trade until it become going up. It start going up and then you'll be positive in it. And before you make the purchase, it's good to compare the last time the price touched base with that support line. If it remained longer around that support line before taking off, that way you know that you don't need to rush anything. You can wait a little bit longer observing that stocks. And as we are looking at M.A.R, for instance, it touched base with this support line quite a bit. So when it reached this new high and pulled back, it touched base with a few times on its way up again. So before, let's see, here it reached another high. So it touched base with a multiple times here before it reached a new high. It pulled back to it and then went up again. Let's see, for a while, like reached a new high, went up a little bit, maybe 6 months or so, from November to April, yeah, maybe 6 months or so. And then this one was higher too, but then pull back again. And for October here all the way to February, about 5 months or so, and it pull back again. So when it was coming back, we have an arrow here. We purchased the stocks there. So when we purchased it, because it was around this support line, it pulled back on us. So let's zoom in to see if we waited. So we saw, let's see, this low is higher than this one. Pretty much one higher low is all we saw and we got in the trade there. And it was a risk, but again, we traded multiple times in 2025 using short upturn and swing trading strategy. So we are okay taking that risk. The arrows at the bottom shows where we bought. The arrows at the top facing down shows where we sold. So we bought it, but it was not done going down. So it pulled back to the support line, went below it a little bit, and then start going up from there. So we bought it somewhere here. You can see the corresponding price to that bar. Even though it's still around the support line, we should be positive in it because the price corresponding at that bar that we purchased it at is, the price is lower than the price it is now. So we should have some unrealized gain in this purchase. But you can see that it has now reached a new high here. Yet it went up a little bit and pulled back. So it seems to be, still around the support line here. So still like around the support line, therefore it's still buyable. It can still be purchased. Although if you ask me if it can be purchased today when the market open, I will say no, it's not a buy today, because if you don't have it and you wanted to purchase it, you are not really seeing an uptrend yet. If anything, this is a downtrend, because this low is kind of same as this one, but lower than this one, which is lower than this one, which is lower than this one, and this one is the same as this one. So you have a small downtrend there, but you have this one, in fact it's the same as those two, or maybe higher up than this one. So you wanted to see a higher lows when you are trying to make a purchase. You wanted to see if you are having a higher lows before you make the purchase. So I feel like it's still around this area. It's not showing an uptrend yet around this area for you to get it. You can observe it when it starts showing higher lows. You see about 3 or so, then you can purchase. Like for instance, you have an uptrend here. This low is higher than this one, which is higher than this one, which is higher than this one. So if let's say you just let's say you come across these stocks around this area, for instance, well, that is one higher low, that is two, and this is the third one there that is higher. So therefore, let's see if we can, this could be a buying point for you. If you are counting, let's see, this one is higher than this one, but this will be more than one to count. So yeah, this will be a buying point. So now when you purchase it there, let's see, it will be like around 270 or so. You'll notice that after you purchase it there, the price went down and then went up, continue going up, and then now start going down. So you'll notice that 270, don't know if you followed how we are doing it, but that 270, the price went below it. When you purchase it around this area, and then you became negative for a while, and then you became positive for a while, and then now negative again. And the price around this area, you could be positive in it. Is still around that 270, but a little bit below the pricing point. Now the price are going up, and now a little bit down. So you will still be at this point, you will still be a little bit negative in that purchase because your price will be a little bit higher than where the price is. So those are things you have to understand and know that in a short period of time, when you have that stocks in your portfolio, the price is going to fluctuate. The price could turn, depend on where you purchase, because we are purchasing it at the support line. Is good. Sometimes it might stay there for a while before it will start going up. So those are things that after doing it for a while, you will start stretching the strategy you are using to see how much risk you can take, or how much test your boundaries, and then make decision. And by trying to avoid staying in the trade longer and wait to see those higher lows to purchase, you'll notice that you'll pay a higher price for it compared to how much I pay for it here. But still, by doing that, you can still be negative. You will see when I put my bar there, I put the mouse there, you will see that some price bar are below that line here. So there is this price bar here that is below that line. So during that time frame, you will be negative in that trade. Those are things you have to consider. By waiting to buy it when it start going up, you could pay a price for it that when it's fluctuating and is going below that price range, you will experience some unrealized loss in your account. But if you pick a good stocks, you don't need to sell. I do not set a stop loss because I don't want to sell at a loss. I just let it be. Sometimes it could take a year for the stocks to become profitable enough for me to sell it, depending on where I purchase it, because there are some that are purchased at a higher price because using short option and swing trading strategy, I trade these stocks at a higher level, and I could well have purchased it, and then the price will fall back and I'll get stuck in the trade, and I'll just let it be there because of the quality of the stock that I'm swing trading to begin with. So that is your risk management, by cautiously picking good stocks to trade. So by buying at this low and entering the trade a little bit too early, when they pull back below the support line, I got stuck in it, but now it's positive. So we can take a look at our record here for M.A. So we purchased say M.A.R. So we purchased it in March for 244, and we have not sold it yet. So that was the purchase session. So the sold session is blank for the time being. So for 244, and now is at 260. So you can do the calculation and see we might have about $19 to $20 profit a share there, for, you know, by buying it in March, and we have not sold it yet, and it's still going down. So we don't know if it's going to go all the way to where we purchase it or not. But because the land you are buying it is uptrend, even though it's going down here, the price is going to be higher, or could be higher than what you pay for it. For instance, you can see that when I put my mouse here, the price is corresponding to a lower level. So because the line is tilted, you see this line here is tilted, so the price, even at the same level, the price is going to be, you know, different, because it's going to be higher up here compared to, you know, somewhere here. But this is M.A.R. The next one we are going to analyze, let's analyze M.A.N.H as well, and we can talk about our exit strategy with that one. So M.A.N.H is pretty much the same scenario here. So for M.A.N.H, we purchase it somewhere there and run out, but because the price pulled back to the support line, we bought it when it showed us a growth there, but it was not done. It pulled back again, and then it started going up from there. So, and went up a little bit, but then pulled back again to the support line. So how much we pay for it is lower than what it is right now, even though it's still around that support line. So, and we purchased it around March, and it's October now, and it's still around this area. So you ask me if that's a buy today, I will say no, because here we are not seeing an uptrend yet. So it'll be good to see 3 higher lows here before you buy at the first or second green bar that will follow the pullback. Therefore, it's not a buy today. Although if you purchase these stocks multiple times in the past, being around the trend line, you might want to, you know, observing it, so that as soon as you start seeing it start going up, you buy it, so that you buy it close to that area. But for me, getting in it early when it starts showing up a growth there, I got stuck in it. It showed me some negative numbers here all the way to probably 2 months, for 2 months, and then it started becoming positive. So even though I purchased it around that trend line, it's still around that trend line here, but the price here is higher than what I pay for it around this. Pretty much about $20 difference around that same support line. There was that much difference in it. So now you'll ask me, if I wanted to sell it, well, where will I sell it? So because we are swing trading large cap stocks, growth large cap stocks, upward large cap stocks, I like to set the new high as the first exit point strategy. So I'm thinking about 3 strategies, and the first one is to wait until they reach the next high, because they are large cap stocks and growth stocks, and I'm using maximum daily chart. It will show me the all-time high when it reaches. So buying it at the support line, the first exit point is to wait until that new highest price is reached. The second strategy will kick from there is when it reaches, should I sell it right away or should I wait? Then I'll come back and compare the last time it touched base with that support line where I bought it at and reach a new high, which will be June 2023 if it went back down again to that support line. The answer is no. It continued to go up, pull back, went up, pull back, leaning on the upside wall of the mountain, that support line, secondary support line to support the upside wall of the mountain, but it didn't come down to the valley line again until now. So therefore, from June 2023 all the way to December 2024, which is about a year and a half, it was on the rise. A year and a half. Therefore, I could say maybe it could continue. If you want to repeat that same pattern, it could continue the rise for a year and a half. So after the first new high is reached, the second strategy will kick in. I will decide that I might stay in the trade maybe for a year, knowing that it's going to be going up, going down, leaning on the far side wall of the mountain, the upside wall of the mountain, the support line supporting the upside wall of the mountain. That's when they pull back to it, and then it start going up from there. But I'll just leave it alone for a year or so. Now the third strategy, that is a new strategy of mine, will be to quantify my exit point so that I can use that to support my second strategy, to see if it makes sense to stay in the trade for a year, or if I need to stay in it less than a year or even longer than a year. So to do that, I will take the price that it touched base with the support line, which is 112, and the previous highest price, and calculate a ratio. So I will take that 312 divided by that 100. I thought I saw 112 before. Let's just use that 114. So we'll use 312. I'm just rounding it down, divided by 114. It's giving me 2.7. So that means from that support line, if you purchase it there, the price will have double by here. So 2.7, we can take 2.7 times. So the lowest point that it went when it pulled back to the support line, the lowest point is 142. So 2.7 times 142, I will say that, okay, I could stay in this trade for a year or so, or until the price reach 383, and I will sell it. So the third strategy quantified my exit point, while the second strategy gave me a time frame. So I will use those two to support each other to see which one will reach first, and then see if I need to get out of the trade or stay in. And since we are talking about the future, as we are getting there, I will continue revising my strategy to see if the strategy work or not, what should I have done, and things like that. And I like to journal my trade by putting arrows on the chart, so that gives me landmark or identifier point for me to reference when I'm making those decisions. So that is our entry and exit point using long uptrend lines. So the next one on in the list that we can analyze is M.A. So you'll notice that those two that we analyzed, they are highlighted on our portfolio, but not M.A. So M.A, we purchased a lot in 2024, but we have not purchased it yet in 2025. So the last time we purchased it was somewhere right before at the end of 2024, and we sold it at the beginning of 2025, again using short uptrend launching trading strategy. And now that we color code those two lines to buy at, I will say that this could well be an upside wall of the mountain that support line is supporting, and this could be well be the valley line, but I'm not sure. Therefore, I'm just waiting. Yesterday the price, no, Friday the price went down. It's going down to this support line, but again, it is not a buy for us. It's not a buy when the market open today. We are just going to keep observing it to see, because it reached a new high here. This cannot be the valley line. It's just too close to the high. So that is a support line for the mountain. The mountain is like this. So this side of the mountain need a supporting wall. So I will say it's still, that is the supporting wall of the mountain. This will be the valley. But it has been on the rise for many years now. But because I'm using long uptrend and swing trading strategy, I prefer to wait. I don't want to buy it and then it will pull back. I have some like that in the portfolio. When I purchase it, thinking this is a support line, the valley line, but it turned out to be a support line for the upside wall of the mountain. Therefore, when it pull back, then I'll get stuck in it for even longer. And I might have to buy it again at the support line if I want to, when it start going up. So, and just having few that went through that already, I learned from it and I just prefer to wait. So you just keep improving your strategy based on the experience you are gaining by swing trading. It's a practice. So this is not a buy. So that is how we determine our entry point and exit point using uptrend lines, long uptrend lines. So we can come back here and look at M.A.N.H. So those three are actually here. So we purchased this one in March, like we just saw it, for 173, and we have not sold it yet. As for M.A. that we purchased in December for 522 and sold it in January for 542 for $300 profits. And as for this one that we purchased for 173, we can see how much is selling right now. So there is about $220 a profit per share there accumulated for the time being. So thank you so much for watching our videos. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much y'all that subscribe to our channel. Thank you for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, one share at a time, just to test the strategy with the stocks you are trading if you have not purchased that stock yet. And once you have a profit with that stocks, even if that's just $1 profit, when you are going to buy it again to increase your profits, you just increase the number of shares you purchase. But by buying one share at a time, it allows you to stretch your profits. It allows you to stretch your capital so that you can try multiple stocks in your portfolio. That way you won't have all your money trapped in one stock. You can see the time frame we determine for M.A.N.H, for instance. That is that time frame our money will remain in that stocks, growing in that stocks. Therefore, if you are starting out to keep practicing your strategy and see which stocks in your watch list that are compatible with that strategy, you have to be able to buy them when they come down to the support line where you want to buy them out when they start going up. So you want to be able to have money in your account to be able to buy them. Therefore, if you have a small account, you might want to stretch your money, because again, with this long up to long swing trading strategy, your money will be trapped in the stocks you are purchasing for swing trading purposes for a long period of time, 6 to 12 months in average with this strategy. Therefore, you will keep investing money in the account. So it's good to determine how much you want to spend per trade. But at the beginning, when you are practicing, 1 share per stocks is enough. If that's enough for you to justify the brokerage fee you are going to pay. With Charles Schwab, the brokerage fee is insane. You don't pay anything to buy, but you pay something to sell if you sell it in a short period of time. And that is like cents. So that is okay. But if you are being charged a higher flat fee, then you might want to consider that as well to see if you can make up enough profit to pay that higher fee and still have some profit left if you purchase only 1 share. So just take my suggestion and apply that to your situation to see if that fits or not, and adjust it. So thank you so much for your time. For more of our swing trading related videos or tips, will you please check the playlist in the description of this video. Thank you.